So this is the information that we know of as of yesterday. We're going to try to walk through a couple of things to help everyone start to think strategically moving forward. For those of you on this meeting that are new to Auker, we have on the meeting with us Doug Burkholder, Charlene Fazzolari, and Katie Nieder, who's going to be running the slides. And also, as a reminder, I want to tell everyone to visit our website. Everything that we are covering here today is covered on our website. We have taken the time to keep the website updated. It has the latest information on it, covering all the topics with the tax changes. So please visit our website to get updated information as we move along. At this point, we're not going to be doing email blasts with everything new that we find out. We're going to be updating our website for you to go on and get that information. So the first thing we're going to do today is go over 6 things every small business should do now. Next slide, please. The 6 things, as we see it, is to look over and consolidate as many liquid financial resources as possible, prepare and update a crisis budget, develop an employment strategy, prepare and maintain a cash flow burn rate analysis, track qualified loan forgiveness expenses, and look at implementing cloud-connected technologies. We're going to go over each one of these briefly. Next slide, please. So the first thing, as many of you are aware, the SBA has a new loan program that we're going to be going through in detail later in this presentation. The loan opens tonight at 12:01, and we're going to give you more information on that. Go through and evaluate any open lines of credit that you have available. Take inventory of all of your cash savings account, and even possibly consider looking at home equity financing to get through this crisis. Next slide, please. So to prepare and update a crisis budget, first you need to identify the fixed, variable, and payroll costs. The fixed costs you're going to identify are such things as rent, utility, loan payments, etc. Some of the variable costs are materials and supplies, anything that you can cut that corresponds to your volume. And of course, the payroll will be an important factor moving through this presentation. If you haven't done so already, I would advise you to contact your bank for loan deferral options. In most cases, a lot of banks, per the Fed's request, are either deferring the payment or making you or allowing you to pay interest only on those loans. So it is critical to contact your banker if you already haven't done so. You can also, in this crisis budget, I know a lot of you also have requested a waiver to continue your operations, or at least part of your operations. If you haven't considered that, you can also request that waiver online, and we can help you with that. We're going to cover a worksheet for this crisis budget shortly. One other thing to note is the possibility of checking with your insurance carrier on any disaster coverage and any other business continuation coverage that you may have. Next slide, please. So developing the employment strategy is going to be probably the toughest with all the rules that are coming out and the tax law changes. We're suggesting to make a list of the vital and non-vital employees and consult with an employment attorney regarding the time tracking, furloughs, layoffs, voluntary unpaid time, and paid time off. Now, there's differences in those categories in that a furlough is a layoff where you're still paying the benefits. A layoff is you don't cover any of the benefits that the employee had prior. And paid time off is their vacation or sick leave. That could be one way to get money to your employees, is to have them take their PTO first. Next slide, please. So in the preparation of the cash flow burn rate analysis, I think this is something that you want to get started and then update as situations change. As I said, we do have a spreadsheet to help you with this, but I would suggest keeping it weekly as the situation changes, because the situations are changing daily in our world with new updates to what is going on. I know the next 30 days are going to be critical, but I would still update everything on a weekly basis based on your anticipated cash inflows from accounts receivable, loans, and anticipated outflows such as payroll and fixed operating expenses. And we're going to show you the calculation for the cash burn rate in a moment. Next slide, please. One of the important things with the SBA program is going to be to track the qualified loan forgiveness expenses. We are going to identify the qualified loan forgiveness expenses for you later on, but you're going to need to maintain a spreadsheet or some sort of process to help track those qualified expenses to submit to the bank. Next slide, please. The other piece is, one of the things with this environment of working from home is to work on cloud connected technologies such as video conferencing. We're using Zoom today, and the Zoom meetings is what we have been using to keep our staff connected, meeting several times a week. Internal communications, what I mean by that is we use a piece of software called Glip. Some of you use Slack or Teams, and that type of internal communications keeps your whole team connected versus just emailing back and forth. Cloud-based accounting, we are looking at QuickBooks Online or hosted QuickBooks so that you don't have server needs. And one of the biggest things, the last point on that slide, is to ensure that all your technologies support the two-factor authentication, meaning that you have to use your phone or some sort to get into it, because I think from what I've been reading, I feel that all of us are going to be bombarded with scams, especially if you're applying for SBA loans, or you're going to get emails from somebody that's not SBA asking for you to disclose information. Be aware that you should be in communication with your bank. I would be hesitant to open any emails that you are 100% positive of their origination. That's going to be a big thing, is the fraud factor in this. People are going to be hovering over trying to find a way to get into your system. So that's a fast summary of the 6 topics. I don't want to keep everybody on here too long. So Doug, do you want to go through, please, the worksheet that we have on the cash burn?
Yeah, absolutely.
Thank you.
All right, so Mike was talking a little bit about cash burn, and this is certainly one of those situations where the old adage, cash is king, really comes into play. For those not familiar, definition here up on the screen, cash burn rate is simply how quickly your company goes through cash. The other kind of relevant definition is the cash runway, which is basically at that given burn rate, how long are your cash reserves going to work, or how long are they going to last? So if we can take a look at this cash flow projection tab, and just walk you through a real simple example. Most of you are familiar with an income statement, and at first glance, this looks like an income statement because it certainly resembles that format. But one of the key things to understand here are we are looking more specifically at receipts and disbursements than income. And what that means, if you're used to reviewing your reports on the accrual basis, when you go to fill out a spreadsheet like this, you don't want to be using accrual. It doesn't matter right now what your invoices going out are. It's much more important how much of those receipts you expect to get in a given week, month, whatever period of time you're using here. So I'm just going to walk through a real quick example on how you might use this. We're starting with the $5,000. We'll say this is our cash in checking account at the beginning of the period. Here we're calling it April 2020. If we plug in $50,000 for cash collections, that'd be receivables collections for the month. Plug in just a couple expenses, maybe $1,000 for advertising here, $2,000 for contract labor. Let's see, materials and supplies, $35,000. Let's put in our rent payment, $3,500 here. And then let's put in some wages of $15,000. All right, so looking at cash receipts for the month, we started with the $5,000 beginning checking balance, $50,000 receivables collections. We got $55,000 in cash to work with. Expenditures, we have $56,500. So there's already a little bit of an issue there. We're going to plug in one more thing. Down here in the very bottom section is where we would put additional expenditures that might relate to the balance sheet, principal payments on loans, capital purchases. So let's put in a $2,000 principal portion of a bank loan payment down here. Nice round numbers, we'll keep the math easy. Total cash paid out now is $58,500. So to calculate the burn rate, again, we started with $5,000 up here. We ended with negative $3,500. That means our burn rate is $8,500 for the month. Each month we are burning $8,500 in cash. So the other definition, the other thing to kind of keep all of this in context is the cash runway, which is at what rate can we afford that, or to what extent can we afford that burn rate? So using this example, if we had additional cash reserves, maybe a business savings account somewhere of $17,000, we can sustain that burn rate for 2 months, $8,500 for 2 months' time. So that's just a quick example of how you might use a spreadsheet like this to frame up what the current demands on the business are. And again, those demands are specifically cash. This is cash planning. How are you going to sustain cash expenses? bank loans using deferrals and other options that Mike was talking about earlier, and perhaps additional bank loans, which we're going to talk about a little bit later here. Mike?
Thank you, Doug. And there's another tab on that. If you can click on that burn rate calculator, that can help you go through that as well. Just what Doug was explaining on that spreadsheet. Okay. Thank you, Doug.
Sure.
Now we're going to get into the some of the loans that are available out there. We did learn actually yesterday at some time, that the PIDA loan is closed. We're still going to go over that after the SBA information, but the PIDA loan that was available, I think they started it with something like $60 million. You could apply for up to 100,000. That has closed out. I'm not sure at this time if they're going to be trying to fund that with more money, but we're going to keep our eyes on that. And if we learn anything further, we're going to be posting that on our website. Next slide, please. So the federal loans that are out there with the SBA, in regards to the SBA, are the Economic Injury Disaster Loan. And pending, and the reason we have pending there is that the brand new, from last Friday, the president signed the Paycheck Protection Program. That loan goes into effect at 12:01 tonight. Banks are going to start to be receiving or making requests for loans on that program. If you already haven't not done so, you need to contact your banker today and get information. We've seen several banks of their information requests for that. That loan will go through your banker. Some of the information that is requested is a little bit different, and we can provide you the support that you need to help fill out that application. Next slide, please. The first loan is the Economic Injury Disaster Loan. And of course, we're all under the governor's order as a disaster area. The loans that are available are up to $2 million. The loan interest rates are 3.75 for small businesses and 2.75 for nonprofits. We don't have any information that they're going to lower those rates. You'll see later that they did just recently, yesterday, lower the payroll or Paycheck Protection Program loan rate. And this is eligible for employers with 500 employees or less. Next slide, please. There's a maximum loan term of 30 years, and that's determined on a case-by-case basis. This loan, you have to have credit history, a fairly decent credit score, and you must show the ability to repay the loan. There is collateral requirements for this loan of over $25,000, and the SBA does accept real estate as collateral. However, we're understanding that it won't be declined for lack of collateral. Next slide, please. This loan is applied for online through the SBA website. They have, in the past week, they have streamlined the loan application process. Last week, the website was crashing just about every day, and they, I know they shut it off midweek last week to do updates and so forth on it. When you apply for the economic injury disaster loan, there is a $10,000, up to a $10,000 grant that is available upon the successful application. That advance does not have to be repaid. That is classified as a grant, and it is non-taxable. I've heard, and the money comes within 3 days. I know of one client that he said it took him 10 or 15 minutes to go through the process, and he's getting 10,000 bucks in 3 days. So I don't know how complex your business is to get through that, but you know, I think if you're in need of some cash, that might be an option. Now, if you do go for the economic injury disaster loan just to go after that $10,000, you can do that going through the streamlined application process. And then when the loan is approved, you can simply decline it or refinance it into the Paycheck Protection loan that we're going to go over next. So you can go in and snag that 10 grand if you have time to do so, or up to $10,000. I say up to because we just learned that it's up to yesterday as well. It's not just a flat $10,000 for everybody. It's up to $10,000. Next slide, please. So the Paycheck Protection Program, this is the new one that was just signed last Friday. It seems like a month ago that it was signed with the time that has passed. The loans are available up to 10 million. The loan amount is calculated at 2.5 times average monthly payroll expenses over a 12-month period. That comes out to 8 weeks. The loan interest rate was changed to 0.5%. Under the original CARES Act, it was capped at 4%. So really, there's very minimal interest on this money if you do have to pay it back. The maximum term is 2 years. There you can see the original term last Friday was 10 years. So I would imagine, depending on the circumstance, that term may change in the future as well, depending on what they see as the amount of loan forgiveness that they're giving through this program. Next slide, please. The Paycheck Protection Program, you must show the ability to repay the loan. The deferment of the payment is automatically 6 months and possibly up to a year. Loan forgiveness is a percentage of payroll costs, rent, mortgage interest, utilities, and other debt interest for the 8-week period the loan originates, the origination date of the loan. Businesses who receive Paycheck Protection Program loans to cover employee salaries, payroll support, mortgage, or other debt obligations cannot also use or use the economic disaster loan for the same purpose. So they don't want you using the economic disaster loan to cover payroll that you're given debt forgiveness on. So depending on your needs, if you feel that you need the disaster loan and the paycheck protection loan, you're going to have to be really careful what expenses you qualify in each of the loans so that you don't double dip, so to speak. I think the first course of action will be to get this paycheck protection program loan, and then maybe circle back to get the disaster loan, depending money for the paycheck protection program. the qualifications for the loan forgiveness. So they're going to give you money, and then out of that money, you're going to report back your expenses, and that loan amount is going to be forgiven. So it is free money. We're going to go over a spreadsheet for this in a minute. But the qualifications are 75% of expenses in the 8 weeks must be from payroll to get that loan forgiveness. And this is brand new as of the 31st. They changed that from 100%, or having any percentage at all. And there again, that last bullet there, if you're getting the Families First Coronavirus Relief Act credit, you can't double dip with these payroll expenses. Next slide. The qualifications for this program, the qualifications for the loan forgiveness can be reduced by a formula, number of full-time employee equivalents during the period divided by the number of full-time equivalents from January 1st, 2020 to February 29th, 2020, or from a period last year, February 15th, 2019 to June 30th, 2019. Anybody that you pay over $100,000 annualized in 2019 are excluded. The amount over that is excluded from the loan calculation. There are special calculations for seasonal employers, snow removal, lawn care, etc. The loan will be reduced also by any wages for an employee whose pay is now more than 25% higher than it was prior to the loan. So what this means is, you can't get into this program and start throwing out bonuses to reach that maximum capability. The last bullet on there, if a loan is made, any officer whose total compensation is greater than $425,000 for 2019 cannot receive compensation more than the total compensation received in 2019. So there again, it's looking at that cap on the salaries. Next slide, please. So some of the things that we're seeing from banks, and a lot of you have already contacted your banker, so you have this information and are currently sorting through the requirements. The income statement, balances of bank account, credit cards, monthly expenses. There are several standard forms that are going to be required. And as I said before, please circle back to our website. This information is all on our website. And as well, your banker should be giving you a list of these forms to fill out. You do want to be fast, as the last bullet point indicates. You have 7 days to respond to additional requests. So once you submit that application, you're going to need to be on top of it. Give it 100%. Next slide, please. Here's some other information required. Payroll documentation from the last 12 months. We're working on setting up for the clients that we do payroll. We're setting up a document or a printout that will allow us to give you that information. They want some specific information with those payroll requests. We'll help you with that. One thing that I do want to add to this, had a bank that requested the first quarter of 2020 as well. So I would suggest that you get that prepared as well. As I said before, the information is coming out daily, and it is changing every day. Approved lenders and banks. Well, I believe, from my understanding, that every bank is now approved for this SBA loan. There are banks that have already kicked out information that I've seen this week. I know that yeah, some of the local banks. The purpose of this is to hire the employees back to get the money into the employees' hands. That's the whole purpose. So you're going to be able to receive the money and pay it out to the employees and get forgiveness on that. So, you know, I was speaking with someone yesterday afternoon, and they had some jobs that they were looking at they could possibly do. And I was talking through it with them, and I said, you might want to hold that work to when you get this loan so you can hire back your employees to do the work to get the qualifying payroll. Because at that time, he didn't know what kind of backlog he was going to have after that work was going to be completed. So that's the way I think you have to start thinking strategically at this and looking at your cash burn rate and making the decisions. Some of you that have staff that are still on payroll but aren't doing anything, I believe that you have to take into cash burn rate consideration and lay off those employees. They are going to get a check once the Pennsylvania Department of Labor gets their website prepared from the federal government to help supplement their unemployment. I believe it is $600. Is that correct, Doug?
Yep.
$600. Which in another conversation yesterday, I had with clients that they indicated, well, they might be making more if they get that $600 check than what they would have been if they were working. So how do we get them back to work? Well, you know, if they don't come back and generate the work, you know, after you get the loan, I would find somebody that would do the work, quite frankly. So we're going to do a demonstration. Doug's going to do a demonstration of how this calculator works. Doug, do you want to take over?
Yep. Okay. Now, Mike already did a great job just talking about how this loan works. Just to dig into the nuts and bolts to understand this tool a little bit better, I think along with the alphabet soup of this whole new CARES Act and the Payroll Protection Program and the EIDL, the Economic Disaster Loans, is some of the dates that are involved with these loans. So the first thing to understand here is the maximum loan amount is 2.5 months times your average monthly payroll. And that average monthly payroll actually includes employee benefits, things like health insurance and retirement plan. So you're starting with a loan amount of 2.5 months, but then as you read through the application, you see this 8-week period of time, and that's really what's being measured to understand what portion is forgiven. So at first glance, it's a little bit hard to reconcile what's the difference in those periods of time. Why 2.5 months if we're only looking at 8 weeks of transactions? Well, to understand that, the 2.5 months actually comes out to 10.83 weeks. The payroll portion that they're measuring is over that 8-week period of time. So essentially, they're giving you best part of 3 weeks of extra cushion to use for other expenses. And those other expenses can be things like rent and utilities or the interest portion on a mortgage payment. So in essence, when this first came out, we understood that the whole thing could be used for all of those things: payroll, utilities, rent. But as we understand it now, it's named the Payroll Protection Program for a reason. It is primarily for payroll. And again, as Mike mentioned earlier, one of the new criteria for this is at least 75% of the proceeds during that 8-week period of time be used for payroll. So with that as a little bit of a backdrop here, let me kind of walk you through what we're doing. First portion here, this is what I was talking about in determining the maximum loan amount. This is where we're going to figure out what 2.5 months of average payroll is. So plugged in some numbers here. Gross payroll for the year, in this case, I'm assuming the 12 months to be calendar year 2019. 375,000, an additional $50,000 for the owner's salary, and then $10,000 to cover retirement plan matching. So the total annual payroll here is $435,000. Now, there are some subtractions that come into play for some companies. Any employees making more than $100,000 are not covered by this. So if you have those, you need to adjust for those because you won't be able to use those expenses to pay for those expenses with these loan proceeds. Payroll taxes aren't included. Here's our divisor, 12 months, and 2.5 months times that monthly amount means that in this particular example, our loan amount is $90,625. Now again, that's the loan amount. We've not yet determined what portion of that is forgiven. So on down the page here, we're going to look at that. Mike was talking about the criteria here to forgive the loan. One of those criteria is that you have to have the same number of full-time equivalent employees this year as you did for the 8-week period last year. So in this example, I'm keeping it real simple. I'm assuming we had 8 full-time equivalent employees for the upcoming 8 weeks versus 8 last year. So by sheer number of employees, in this example, the loan would qualify for 100% forgiveness. We're not quite done yet, though, unfortunately. On down the page here, we're looking at the estimated loan forgiveness, and here's where we're plugging in. These input blocks look similar to what we saw above, but here's where we're plugging in the actual figures for the 8-week period of time that we're evaluating this year. So if you take that average monthly payroll, I think in this example, I assumed a 2% inflationary increase over last year's cost, plugged in gross wages, officer wages, employee benefits, all of that very similar to what it was in the prior calendar year. We get a total of $68,200. Down to the final section here then, how much of that's going to be forgiven? Well, we have other costs that we can afford to pay out of these loan proceeds because again, 75% of these have to be used for payroll costs, but there is potentially 25% that you can use to pay for rent, mortgage, and utilities. So plugging in a few amounts here, if we plug $3,500 a month in for rent and $600 a month for utilities, the total amount spent under this program in this case is $76,400. Let's go up to the top to see how that stacks up. How did we do? Well, one of the key things to look at here, because that 75% is very important, is did we dip down below that? In this particular case, we used 89% of our loan proceeds for payroll. So we're in the clear with that. Also in this case, we didn't use the full 90,000 given. So I think you need to be really careful to not cross below that. Mike, I don't know if you've heard any more. We've heard a little bit of conflicting information about this 75%. There's been some reports that if you get below that 75%, the loan won't be forgiven. Period.
Yeah, I just read this morning that it's going to be prorated.
That would be great news.
Yeah, it's not like a all or nothing, that it's going to be prorated based on the percentage. And there is a calculation out that does that now. We'll have to look at that and see how that affects our worksheet here.
Yeah, great, thank you. You know, again, I was saying here, we've not used all the proceeds. As if you work out the math, the 2.5 months versus the 8 weeks, what that means, if you want just a quick rule of thumb, if you have the same payroll cost this year as you did last year, meaning no increases at all, if you take 5% of your annual payroll cost, that's how much, or roughly how much you would have to spend on rent and utilities, rent and utility payments in addition to the payroll, and still comply with the 75% rule. So just kind of a rough planning measure there, a little bit of a rule of thumb to know where you stand with proceeds.
Thank you, Doug.
Yep.
Good job. Thank you. Okay, back to the slides. So we're going to go over the Pennsylvania Industrial Development Authority loan quickly here, even though that it has closed out. These loans are run through your county development corporation, like the Franklin County Area Development Corporation. So the Industrial Development Authority, they all direct you to your local office. And they're providing working capital loans of up to $100,000. There are, in the second bullet, for retail and service enterprises, you can finance 50% of eligible working capital costs. That's 6 months of working capital costs up to $100,000. And all other industries, it's a 3-month look back for 100% of working capital. And that would be everything below your cost of goods sold section. There are no job retention or creation requirements. This is a loan with a 12-year amortization. No payments due the first year. And there's going to be principal and, if applicable, interest for years 2 and 3. And then there's a balloon payment on the 3rd year. The interest rates, next slide, please. The interest rate is 0%, except for the agricultural producers, which it is a 2%. There's no application fees. They do require collateral, as well as guarantee by any individual or entity owning 20% or more of the company. And as I said, all loans must be submitted to your certified economic development organization in the county. And there is, we have a link up there that you can go on and click that. So just some notes before we close out here. I don't want to take up any more of your time. I know we're all busy in this time. But again, please go back to our website to answer questions. We just added a small business info guide onto the website that provides a lot of this information with resources. We're not going to be email blasting everybody with every new change, because I know everybody's email is just like mine in that you get so much information and on a daily basis on these topics that it's just overwhelming. So we found it easier to direct everybody to our website. So that concludes our presentation for today. I want to thank everybody for joining us today to gain some information. It's a beautiful day outside, and make sure you get out and get some sunshine. Have a great day, everybody.
I had one item that I wanted to add in. I saw some questions coming through. One of the things that we did not address is the payroll protection loans with self-employed individuals and the unemployment with self-employed individuals. And part of the reason that we haven't addressed this is, as Mike said, the stuff came out last Friday, and we're getting updates daily on this, and the self-employed piece is one of the last pieces that they're pulling in. So the application for the self-employed paycheck protection loan is not due out in another week or two, I believe. Right. So as that becomes available, we'll get more information on that and requirements. And the Pennsylvania unemployment at this point, they have on their website that they're going to offer it, but the application for the self-employed individuals is not available for unemployment yet either. So I just want to throw that in there.
Thank you, Charlene.
Yeah.
Okay. Have a great day, everyone. Thank you.